Up next, let's check in on the grain markets. Joining the program earlier this week was Darin Newsom, who began by reviewing the latest activity when it comes to the corn, soybeans, and wheat markets.
Yeah, it's interesting. We've got three major markets, and they're all doing different things. We've got corn just continuing to grind lower. There's no reason for anyone to want to buy at this point. There's plenty of corn to go around. We could see that in spreads. We could see it in basis. So right now it's just kind of again, as I was told a long time ago by someone on the floor. It's easier for a market to drift down than up, and that certainly seems to be what corn's doing. On the other hand, we've got increasing demand this time of year for the soybeans, for U.S. soybeans. The problem is it's not enough to get things rolling, at least get things caught up to where it needs to be. But occasionally we still see those bursts. We saw it this past Monday when the market was able to rally 30 cents, and that led some announcements of new sales. So I mean, there's still business being done, but again, it's just not enough. And over in the wheat, really the only thing that we've got going on that's pushing soft red winter wheat higher right now. The funds held an incredibly large net short position, and they've been covering that of late.
Okay, of course, right now, South America weather is on the forefront of what's happening in the markets, and it seems like as new forecasts come out, the markets seem to trade that information quite quickly. See some wild swings because of it. Is that a fair assessment, Darin?
That's a fair assessment. I mean, soybeans, I mean, all of these markets that we talk about are weather derivatives. And just right now, it's soybeans' turn to stand in the spotlight. And again, it's not U.S. weather, it's South American weather. And just like we see here in the summertime, in the North American summer, we see what wild price swings. And that's exactly what we're getting as forecasts. First they're putting precipitation in, then they're taking it out, temperatures up and down and sideways and everything else. And the markets reflect that. So on top of the overnight buying that we tend to see in the soybean market, the rest of the session, the rest of the day is dealing with these changing weather forecasts.
Okay, back on soybeans when it came to our domestic supply here, and as we look at demand exports, we're 18 to 20% behind our pace that we had last year. You say it's not enough. What are you watching when it comes to exports and demand, that is, for soybeans?
First thing we really need to see is our total sales to go up. And in last week's weekly export sales and shipments update, we saw where total U.S. sales are running 18% behind for the same week the previous marketing year. Shipments also 16 to 18% behind. We followed that up with this past Monday's weekly export inspections. Still, totals down 18% for the year. So we've got to see that improve. And the problem is we're still stuck in a trade war with the world's largest buyer. And I was at a meeting a number of years ago where some analysts who look at China and the Chinese situation, the pencil was being put to the paper at that point, taking U.S. out of the equation as much as possible, and that's certainly the way it's played out. The U.S. can't really consider itself a major player in the U.S. the global soybean market anymore. It's all about China. It's all about Brazil, and only if Brazil has a weather problem does the world's largest buyer get interested in U.S. supplies again.
So to that point, Darin, do we catch up for soybean exports at this point, or are we just going to be lagging behind the rest of the year?
I think if we're going to catch up, it's going to actually be a later than normal move. Usually it's it's the 6 months between September and February when the U.S. does most of its shipping. This time around, or what we've seen seasonally as far as a change goes, it all depends on what happens with Brazilian weather. If their crop, by the time we get to February, March, isn't as large as expected, and the world's largest buyer has already, booked most of it, and it's already getting ready to be shipped at some point, then they just, only if there's not enough coming out of Brazil do they get interested in the U.S. So we could see a later than normal round of buying, meaning that we may not see those export sales. We may not see those export shipments to get us back up to near normal until after the February timeframe.
Okay, Darin, well, let's get to a couple of viewer questions that came in this week. Of course, we always like to solicit those and pitch them your way. We start with Richard on Twitter. He wrote in, noting historically U.S. corn and soybean future markets peak in late June, early July before beginning their descent to the harvest low. He says, with Brazil harvest become a major player, does that correlate to late December, early January, noting another futures peak for the same crops? Your thoughts?
Yeah, it was a great question from my friend Richard, and I really appreciate him sending it in. And I immediately went to my seasonal studies. I didn't look at the futures market because sometimes those can get skewed. So I pulled up the bar chart national corn and national soybean price indexes and looked at their seasonal tendencies. And yes, we still see those highs, say in the summertime, late May, early June, possibly out into July. But his question was, And I would rephrase it a little bit. Brazil is the major player, and the question mark would be on the U.S. these days. But as far as Brazil being the major player, we haven't seen a seasonal change. We haven't seen that December top in the market. In fact, both cash indexes show a relatively solid uptrend, from the time we get into the winter season up through the spring, early summer. So we don't see that seasonal top in December that we do in the North American summertime.
Darin, appreciate your thoughts on that. Also want to get to Jeff. He wrote in on email. Said the local elevator is offering a fair price, in his opinion, for wheat for next September. He's never contracted grain that far out before. He wants to know, is it worth locking in?
Two things. Number one, I will never tell somebody if it's a good price. I won't tell them to not sell. I know that's a double negative, but if it's a good price, we're going to want to do a little bit. The second thing is it's wheat. We never really know what our production is going to be. So if I'm going to start locking it in this early, I'm going to be pretty conservative on what my estimate for yield is going to be. Again, it depends on where it is, depends on what the soil moisture situation is. But certainly if it looks good and historically it's a good price, lock in a little bit. Don't go overboard.
Before I let you go, Darin, your final word here in 2023. How are you going to remember this trading year?
What I'm going to remember this trading year is the strong, the strong uptrend that we're seeing in the U.S. stock indexes. This week we've seen on Wednesday we saw the Dow Jones Industrial go to a new all-time high. We're seeing the S&P 500 and NASDAQ both pushing their all-time highs. So what this could mean is this going to change the investment landscape in commodities? I know, usually those traders look for those markets with bullish supply and demand situations, but they just aren't as easy to find anymore. So it looks like, it's possible, if these trends continue, and they certainly look like they should, that's going to pull more of the investments into equities, probably less and pull some money out of commodities.